So in this video, we are going to look at the elements of an audit risk. We said that three, we have inherent, control, and then detection risk. So we shall start with the inherent risk. Inherent, it's like something that is within, something that you cannot avoid most at times. It's like inheriting something. Yeah, you got maybe bad manners from your father, things like that. Okay. So inherent risk, it is the susceptibility of an assertion. Assertion is like a fact of an assertion about a class of transaction. I would like to elaborate more on this. Like a class of transaction, we talk about the things that appear in the statement of profit or loss. We have the sales, the purchases, those things, cost of sales, the expenses. Those are the classes of transactions. So it is the susceptibility of an assertion. I said an assertion is a fact. Yeah, an assertion about a class of transaction. When we say class of transaction, we mean those things, the sales, the cost of sales, the expenses, those ones. Then account balance. Account balance, we mean the things in the statement of financial position. So we mean the non-current assets, the current assets, we mean the capital, we mean the non-current liabilities and current liabilities. Those are the account balances. So it is the susceptibility of an assertion about a class of transaction, account balance, or disclosure to a misstatement which could be material either individually or when aggregated with other misstatements before consideration of any related controls. Like individually, we mean like when it's alone, maybe purchases were misstated alone, like, or when aggregated with others. Maybe they first got the opening stock, they added purchases, then they subtracted closing stock and all that to get cost of sales. So it can be an aggregated misstatement or individual misstatement. Yeah, but it happens before consideration of any related controls. So here, like the inherent risk, it's when there is a chance that an item is misstated just because of the way it is. It is like its characteristics. For example, inventory. Inventory is just estimated. So the fact that the just estimates, there is a chance that it can be misstated because they just estimated them. So there is an inherent risk there. There is a chance that inventory can be misstated just because it is just estimated. That's what we call inherent risk, like it's within. So inherent risk is the risk that items will be misstated due to their characteristics, as I said, due to the characteristics of those items, like if the estimates, for example, inventory. So auditors must use their professional judgment and all the available information to assess that inherent risk. And if no such information is available, then the inherent risk is high. So inherent risk is affected by the nature of the entity. Like the risks of a school are not the same as the risks of having rentals. So inherent risk is affected by the nature of the entity. It is affected by the industry in which it operates, then the regulations it should comply with, and then the nature of the strategies it adopts. So those are the things that affect inherent risk of an organization. But then inherent risk arises from the nature of the entity and the environment in which it operates. Let's look at the second one, which is the control risk. So control risk, it's the risk that a misstatement which could occur in an assertion about a class of transaction, account balance, or disclosure, and which could be material either individually or when aggregated with other misstatements, will not be prevented or detected and corrected on a timely basis by the entity's internal control. So this is a risk when the misstatement cannot be detected by the entity's internal control. That's what we call a control risk. Like it cannot be detected and corrected in time by the entity's internal control. And control risk is identified by assessing the entity's internal control. So, in simple terms, internal control is that process that is designed, implemented, and maintained by management of an organization to provide reasonable assurance about the achievement of the entity's objectives. Although it is a process that is designed to make sure that everything goes right in the organization, but we shall, like, it's a full topic. It is the next topic 4. Yeah. So control risk, it's when the internal control cannot detect the material misstatements in time. Lastly, we have the detection risk. So detection risk is the risk that the auditor's procedures will not detect a misstatement that exists in an assertion that could be material either individually or when aggregated with other misstatements. So detection risk is about the auditor. It's not about the organization. It's when the procedures that the auditor is using will not be able to detect a material misstatement that exists in an assertion. So auditors control the detection risk as when it's high, they can perform more work to reduce on the audit risk. Like they can do more examination, look for more evidence and all that to reduce on the detection risk. So detection risk is with the auditor. It's the auditor's problem. So the detection risk can be reduced in the following ways. First, increasing the sample size, like you look at different things so that you can be sure. Then the effectiveness of the audit procedures, you improve on the effectiveness of the audit procedures. Then application of professional skepticism, like you always apply a questioning mind and be alert to conditions that may lead to misstatements. Then another way is adequate audit planning. Take time when you're planning for an audit. Then proper assignment and supervision of the audit personnel. Then you also review the work of the auditors. Yes, so those are some of the ways of reducing the detection risk. So those are the elements of an audit risk, the three: the inherent risk, which is within, like it depends on the characteristic of an item. Then the control risk, it's where the problem is with the internal controls of an organization. Then the detection risk, it's about the audit procedures of an auditor. Yes, thanks for watching. Do not forget to subscribe, like, comment. Then, in case you've watched this video to the end, I would love you to give me like your opinion, like whether I should teach like the way I taught topic 1 and 2, or this is better. Yeah, I would love to know the way I'm doing it right now. Is this better than the way I taught topic 1 and 2? So give me your opinion. Yeah, so that I can see what to do. Thanks for watching.